Here we go again. Back to work, back to work. Hope you guys had a great Tuesday trading session. But you know what we always say, right? We're only as good as tomorrow's trades. It's Tuesday evening. We're getting ready for Wednesday's trading session. I have a ton of great trades setting up on my radar for tomorrow. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan, a roadmap to make some money on Wacky Wednesday. As always, before we jump in and go over these trades here for tomorrow, make sure you subscribe so you don't miss tomorrow night's video upload. And as always, if you enjoy the content tonight, hit that like button for me. Appreciate you guys tuning in every evening and supporting this YouTube channel. But enough of the intro. Let's get ready for Wednesday. Hump Day is right around the corner. And boy, with this holiday weekend coming up this weekend, tomorrow and Thursday now really have a sense of scarcity. So we really want to make these trades count here going to Wednesday and Thursday's trading session. What's going on right now? Well, everything is a little bit bullish right now. You'll notice the S&P is bullish after that big drop down that we saw in the early part of today. S&P has a little tone of a bullishness to it, a lot more than Nasdaq does right now. Nasdaq is still trying to kind of get its bulls back in gear here. The bears definitely still have their hooks in this Nasdaq, but you'll see tonight, there definitely is some bullish tone here on the Nasdaq, and there certainly is some bullishness here coming in on the crude oil. We have a lot of great trades setting up here for tomorrow. We got some pullback trades pretty much across the board on all three of these markets. We have some breakout trades, especially on that Nasdaq and the oil. Definitely have some breakout opportunities across the board here today. And you can see here, we've got major resistance, major resistance, major resistance. So you know me, anytime we are bullish into major highs overhead, I'm looking for those reversals as well. There definitely are just as many reversal setups off these highs as there are breakout patterns. Again, I'm going to break down all my favorite trades in this video right now, so you know exactly which breakouts to take, which pullbacks to skip, and how to know when to pull the trigger on those reversals if we get them. Now, tomorrow is a Wednesday. There is some news tomorrow. Let's make sure before we jump into these charts here tonight, let's make sure you know when the big news is for tomorrow. The most important news that you need to be aware of tomorrow is definitely that durable goods orders at 8:30 Eastern time. If you're an oil trader like we are in our trade room, you get the weekly oil report. Don't worry too much about Lael Brainerd. She's probably not going to move the markets around, although she is the vice chair of the Fed. It is not a testimony. It is not a keynote speech. It's basically a commencement speech. So I wouldn't worry about that. But the FOMC meeting minutes tomorrow afternoon might just be a good reason to stick around after lunch, because you know the markets are obsessed with the FOMC announcements right now, with interest rates, inflation. So anything Fed right now, those meeting minutes we definitely can assume could be a little bit of an afternoon delight for us here tomorrow on a Wednesday trading session. So durable goods get us going. The oil report, right, middle of the day for oil trading. Obviously, the oil report won't affect the E-minis, just the oil market there tomorrow. And then stick around for the afternoon session for the FOMC meeting minutes, right? The notes from the FOMC announcement that came out, a week and a half ago, 2 weeks ago. Also, please don't forget, tonight's video is my last newsletter video of the week. I will not be publishing newsletters on Wednesday or Thursday. Monday next week is the holiday. We'll come back and resume our normal schedule every evening during the week after the holiday. If I don't see you guys tomorrow in our trade room, I wish everybody a very, very happy kickoff of the summertime season. The Memorial Day holiday is on Monday. So we'll resume our normal schedule on Tuesday. In the meantime, though, let's get back to our charts. Now you know what's on the radar for tomorrow. Now let's figure out where the money is to make here. Got the S&P, got the Nasdaq, got the crude oil, whether you're trading the S&P and the SPY, the Nasdaq and QQQs, or the crude oil and the USO. I'm going to cover all my favorite trades in tonight's video. Whether you trade one of these markets or all of these markets we do in our trade room, I'm going to cover something new throughout every chart here tonight. There'll be learning opportunities. There'll be earning opportunities. I do try to keep things spicy by tossing in more advanced setups as we go deeper into this video, and I'll definitely save the best stuff towards the end of this lesson tonight, so I'll give you a reason to stick around all the way to the end. With that said, though, let's jump right in. S&P first. We'll go S&P, NASDAQ, or of course, And then, of course, over to the oil. And again, whether you trade in the S&P or you trade in the SPY, this will be our roadmap here for tomorrow. What's the most important thing right now on the S&P? Most important thing, at least in my eyes, we had that big move down. They completed that measured move going lower. And the buyers have made it very clear now. They've picked this thing up and run with it. They're jumping off the moving average. Buyers have control of this market with pretty much a bullish trend. Now you'll notice we're right up around that kind of gap down high. It's basically today's high of day. We're right up around that high of day right now. And it's easy to assume that with this big gap down and this kind of rolling off that low, it's pretty easy to assume the buyers have one thing on their mind, and that is to retest that high, fill that gap, if you will, at 39.78 even. That's what's most important right now. The buyers have control. They're trying to push this thing. But think about, though, there's resistance in their way right now, and there isn't a lot of open space here above us. So we really got to be careful. This is not going to be easy getting in somehow here, unless, of course, you just hit the long button and get in before the market goes higher. We have to think that everything above that 52 3/4 area here, everything in this area here is a little bit high right now to be buying, right? Not a great risk-reward ratio up there. I would also expect here we may see some sort of ranging as people start to try to figure out how we're going to get this breakout going higher here. So buyers have control, but buyers have a very simple job right now. They want breakouts, going higher. I got that 4,000 round number, and I got that 40.19 3/4. These are definitely the big objectives here for these buyers. 39.78, 4,000, 4,019 3/4. Those are definitely where the buyers would love to get some breakouts going here. The buyers would also love to buy some pullbacks, either inside that 39.10 battle zone, or even better, down off that main low. There's definitely are no shortage of pullback opportunities right now here for the buyers. What do the bears want to do right now? The bears, of course, they want to sell off this high, right? They want to sell back down and take out those lows here. The bears are probably not going to have as easy of a job as it goes lower, because again, you've got all these areas of support, so it might be a little bit difficult for the bears if we go lower to find a way in on this move going down. A lot of this has to do with the fact that we've got this trading range yesterday, and so we have to assume this whole area down here is seen as kind of a discount for those buyers. And so again, the bears would love to get this thing back down to retest that low. It may be a little bit more difficult, though, to find the entries as we go lower here. So how do we buy it? How do we sell it? What's the game plan here for tomorrow? I think it's very wise right now to put together a game plan for a range up here. I think a range would be probably one of the most useful things we could see here on the S&P in the overnight session. If we are able to get a trading range up here, if we start going sideways on the chart here overnight, now we can do is we can start finding levels of support down below that trading range and start picking off those pullbacks here. So imagine now this market goes sideways overnight. We go out, we find levels of support like trend lines, like swing lines, right? Trend lines. We want to find areas of support so we can buy that pullback and go back up into that trading range. Ranges act like magnets. So if we see the sideways movement overnight, that becomes our new magnet. And all we got to do now is wait for price to begin to pull back underneath that range, get down into some areas of support down here. Now, I'm not a big fan of trying to pick bottoms. What I'll usually do is try to trap in the bears with a failure pattern. Once those bears come in and try to get short off the moving average, we know exactly where their stops are going to be, and we can simply buy right into those stop losses. I like that trade. I like that long trade with a failure coming in off of that trading range. That seems to make a lot of sense here for me at this point. So watch that one. Now, if we keep going lower, right? Let's say the market really takes off to the downside here. Remember, there's a lot of support down here still. So if we do get a really sharp move down overnight here, remember, we still have that trading range up here from yesterday, which will kind of act act as a magnet over here. At this point now, we want to use that to try failure as we go lower. Let's say, of course, we pull back really deep now. Now we look for that. The bears try once, the bears try twice, run those stops. Where's their objective? The objective is always back up to retest the high. Once those bears try a couple times, and the reason we want to try twice here is because the strength of that move, then again, we know exactly where their pain is. We know exactly where their pain points are, their stops are, and I can buy right into those stops. Now, once I get that deep pullback and that to try failure, it's a very simple variation of the failure setup. Now, as the market starts to run higher, one of the best re-entries or add-on entries we like to use in the trade room is that trap setup. So again, it's a to try failure and then into that kind of trap entry off of that low. Now, I know most of you guys have taken the free trading course. You've learned all about failures and trap setups. Remember, inside that free course, you learn all the rules, when to take them, when to skip them. And boy, I get so many great emails from you guys every week about how you've used that information to start trading stuff on your own account. It's fantastic. Keep those emails and those comments coming. I love hearing from you guys. But listen, if you're here for the first time today, if you haven't taken that free trading class, if you haven't learned what the failures and the trap setups actually look like on a real chart, what I'll do is I'll put a link up here for you in the upper right hand corner. That's the free trading course. Grab that link up top. Take the free class on the website. If you're like me and you're sick of missing the best trades each day, if you hate the fact that you take so many losses, or you're making too many mental mistakes, or maybe you just want a nice easy roadmap to follow to find the best entries and exits each day, that free trading course is the perfect roadmap to get you back on track and get you start growing your account, right? Start making money in these markets on your own. That way, the next time that we get that deep pullback and I say, watch out for that to try failure into that trap on the way higher, you'll know exactly what I'm talking about. You'll know exactly what those setups look like in real time. And of course, you'll know the entry rules that we use to take them. So watch that big pullback here on the S&P. Again, with this bullish market and lots of support down here as we go. Now, eventually here, this market may turn bearish and make a run all the way back down to that low. And not to worry, I'm gonna cover breakouts here in a second, so don't worry, we'll get to the breakouts here in a moment. My job right now is to plan my trades, so I'm ready to trade the plan here for tomorrow. Now, if we take off the downside and we pull back and we jump off that moving average, okay? If we pull back to the moving average and jump off that moving average, okay, this becomes a reversal. Okay, this becomes a 1, 2, 3 reversal pattern. Now the key is when you get those 1, 2, 3 reversals, what you want to do is first of all, make sure you're getting in before we go back and retest these lows. I want to find a new channel now. I want to find a new trend line off that low. I want to find a channel off that high and repeat after me. First test is the best test. The entry off this high is where the money is, right there. I like to drill down and use traps above prior swings. A lot of times these things will get just above the moving average. You can use one of those failure patterns we talk about in the video course. But again, this is a great opportunity for us. Like I mentioned, we have to be careful as the market goes lower because again, there's a lot of support down here. So think of it this way: 1, 2, jump off that moving average, find that new channel. Or draw that trend line, find that new channel, and then watch those traps just above that high on the way down to retest the low. Now, what do you think? Is it possible that we might get that 1, 2, 3 move, find that channel, grab that short, finish off that move back down, and then now the buyers step in? They try once, they try twice, and all those stops get run for that pop going back higher? Absolutely, right? That is definitely something we should be prepared for here tomorrow. Again, it's a 1, 2, 3 reversal. First test is the best test. We run into major lows. Remember, there's a big range right up here from yesterday. And so then what we do next, we go in and we trap in those bears. Let those bears try a couple times, selling into that major low. All their stops are sitting right above that high, and we could pop it for that reversal going back higher again. I really like that idea as we're going. I'll talk about some moves going lower here on the Nasdaq too. Okay, so we'll cover some bigger breakouts here on the Nasdaq right now. So on the S&P, we've covered the range. We've covered the pullbacks, the reversals, and the bounces as we go. How do we trade this breakout? How do we trade this breakout as we go higher here? Good question. Let's grab the NASDAQ. The NASDAQ is a little bit different, but I think you'll see why I think the breakouts are a little bit more reasonable here on the NASDAQ. The one thing about this area is that, well, for example, let's say we go up and retest the high. Then we see the buyers once, the buyers twice, right, into a major area of resistance. These buyers once, buyers twice, where are their stops? Right? Stops are going to be right below those lows. Hit those stops here for that reversal. This is a very easy setup to think about. It's a bull move up, deep pullback, retest those highs. Buyers come in, they try a couple times. Once they've loaded up their positions now to the long side, we know exactly where their exits are. We can look for that short off the high. And then remember, one of my favorite reversals off the high, find that trend line, find that channel, grab that trap. I love that trade. That's a great setup as well. Again, this one we got to be careful with, right? Because we're so bullish right now as we go. Well, not so bullish, but we'll be bullish at that point. Once we run back into that high, the buyers once, the buyers twice, the weak hands are now buying into those highs here. Think about where their pain is, where their stops. That's your two-try failure. And then as we roll over now off this high, where do the bears want to go? Oh, the bears want to go back down and retest that low now, right? They take out that 38.80 low. We drill down, find that new channel, and we grab our traps, our failures, our pullback combos. Again, all the entry triggers you guys learn in that free trading course that I mentioned above, right? So definitely keep that reversal on your radar as well. And then how about a breakout? How about a breakout? There are definitely breakout opportunities here again, up to 4,000, 4,019 for tomorrow. Let's talk about the breakouts here in the NASDAQ, though. The breakouts in the NASDAQ look a little bit easier here at this point right now, and you'll see why. Over on the NQ, the NQ clearly is not as bullish as the S&P is right now. What's the most important thing here on the NASDAQ? And again, you could easily apply this to the QQQs, right? The ETF counterpart of the NASDAQ right now. What's the most important thing here on the NQ? Well, just like the S&P, they had that big monster gap down. They completed their big measured move objective there for those bears. We kind of got tossed around a bit of a range down there for a little while, and we bounced up into a new trading range ultimately. At this point, we have ultimately I dare I say the word bullish. It's slightly bullish in an overall bear environment. The way you can tell right now the bears still have their hooks in this thing is the buyers really haven't been able to hold any real pullbacks. Look back at the S&P chart real quickly here and see how the buyers are getting good separation. See how they're jumping off that moving average, right? See how the buyers are jumping off the moving average here. That's a good sign. These buyers are well in control of this market. We look at the NASDAQ now, and you can see they did a good job right there, but they're not really getting very much extension off that moving average. Again, that's why I say it has a little bit of bullishness because you can see the higher highs, you can see the higher lows, but if you look left on this, you're going to see right away here, we have this, what is basically yesterday's low, is still kind of, keeping a top on this market right now. Now, the silver lining in all of this is that unlike the S&P, the NASDAQ has all of this open space. Obviously, it's got today's high at 11,918, But as you can see, though, this could easily start to break through, and there's plenty of open space up there if we can get some good momentum going higher here. So I think right now, again, I'm very cautioned about saying the word bullish. it does have a little bit of a bullish tone to it. This is a bullish market into a range, and there definitely is a bullish tone to this market right now. But again, until we can really kind of crack and hold above yesterday's low, it's difficult to say this is that bullish right now, right? So we are overall bearish, but again, little bit of a hint there on the bull side here right now. So what do buyers want? What do sellers want right now? Oh, buyers want breakouts, right? That's easy. Buyers want back to 12,000. Buyers want back to fill that gap at 12,056. That's definitely what these buyers are looking for here tomorrow. Buyers would also love to buy a dip. They'd love to buy the low of this range, by the low of this channel. They would love to buy that low of, I mean, there's so many support areas here below us right now. You've got the low of day there from today. And then remember, this area down here is no slouch either. This area down here is another major low. So, I mentioned this earlier. The bears definitely have potential, but they don't have an easy road unless we get a really good momentum push here right now, going lower here. What do the bears want? Yeah, the bears want to go up and they want to sell, right? Back down in. Lots of ranges. Ranges act like magnets, right? Bears want to short on the way back down to that low. Got to be careful on the way down to that low. We'll talk about that here in a moment. But we definitely know the bears would love to sell off of this area here and run this thing right back down to retest the low, which you can see here too has not been retested yet. That was a very strong move down there, mid-morning this morning. They still have not come back and retested that low. If you look at the S&P did get a retest. Right? S&P had that strong move down, and they did get their retest. Remember, anytime we see a strong move in one direction, a retest of that level is very, very likely. So it kind of leaves that door wide open here on the Nasdaq. It doesn't seem likely right now, because it does look a little more bullish than bearish. But again, there still is kind of that open loop, that open window, that unfinished business back at that low here. So we've talked a lot about the pullbacks already on the S&P, but I just want to make sure we're kind of on the same page on this. There's multiple ranges on this chart. So if we see a pullback right now, my favorite trade for tomorrow will be that 2-try failure, that 1, that 2. And a lot of this is because of just a lack of bullishness. Again, the S&P is a lot more bullish right now than the Nasdaq is, and because we have this trading range down here, and ranges act like magnets. So I don't want to get too aggressive on that pullback right now, right? I want to let those bears try a couple times, let them kind of wrap that, proverbial noose around their neck, and then once those stops are hit, that's where the money is, right? That's where we can start to buy as we go higher here. Now, remember, a lot of times these failure setups will pull right back to that moving average for a pullback setup. We oftentimes see those failure into pullback combinations. Keep an eye though, keep in mind, if that failure really punches and really runs high, the closer we get to that high, because that's the retest they want, the closer we get to retesting that high right now, the more we need some sort of trap entry. Okay, remember, traps are the best bet whenever you're buying high. Okay, so think about it. If we pull back and we go 1, 2, we run those stops with a 2-try failure pattern, which we love. If we pull back and then immediately come back to that moving average, yeah, that's a good pullback setup, right? That's a failure into pullback combo. Again, you'll learn a lot more about failure into pullback combos in that free class I mentioned earlier. Okay, but again, very, very important. If the market now really shoots higher and almost back to that high, now we want to really look for traps. The higher we get, the more traps become a must, right? They become very, very important because we want to be buying low. We don't want to be buying high. So think about that trap if we make that, right, that big pullback. This is the same idea. This is the same idea if we go lower. Okay, so this same sequence is exactly what we're looking for if we take out the big low. So if we go to that big low down here, same thing. 1, 2, back up and go from there. Now, if we take out that big low, this is where you can imagine now we're going to have a lot more space to work with. So 1, 2, that failure, this is where we oftentimes can find a new channel. So grab that new channel off the high, find that low, find that trap, right? Or again, whichever pattern setup we get off that, right? I love traps, but again, you'll learn in the video course, that free class I mentioned earlier, you'll learn all about pullbacks and failures off those channels. So if we really do, pull back and take out that low, which would not surprise, I don't think anybody right now, because of they're holding that high right now. Again, try failure, and then grab that new channel and then hit the low of that channel. First test is the best test off of that low. Very, very high percentage trade is that follow-up. And where do they want to go? Yeah, they want to go back up again to retest the high. As we go lower, how do I sell it? Well, again, we're going to see a lot of bearishness as we go lower. We've got to get lower. We have to hold that pullback, right? And we've got to, it really has to run. This has to be a very, very strong move down. Why? Because it has to justify, there has to be enough momentum for us to be able to really justify taking that short. I'm never afraid of selling into a major low if I have enough momentum. If we have enough momentum moving, you're going to probably get at least some money out of that. It may not keep going forever, right? It may not keep going forever, but it will probably end up retesting that low. And then once it retests that low, then we can pick it back up again and look for that reversal with those 1, 2, and back up again, right? Same basic idea we talked about on the S&P. So the easy rule of thumb here as we go lower is I've really got to get these bears to take control with a 1, 2, 3 reversal, and then I got to find my entry signal off the high of that channel, being aware that I may only get a retest of that low. I may only get something like this, right? Where it barely, you know what I mean? Where you get your first target, you don't get that retest, and then we start seeing the 1, the 2 back up from there. But again, there's still money to make off it, right? That's the point I want to make. If that momentum is strong enough, there's still money to make off of that short, off the top of that channel. It may be only a scalp. It may go for a home run. We'll have to wait and see as we go from there. We'll know more. Now, how about some breakouts? Breakouts going higher. There are a lot of different options we have right now going higher. The one thing you want to kind of keep in mind again is that level right there, that 11,918 level. If we go running up overnight and then we see buyers come in, they try once, they try twice. Be prepared. Be prepared. This could be nothing but a trap, and we may end up right back down into that trading range. It doesn't seem likely, just kind of the way this market looks right now, doesn't seem likely, but you have to remember, this is the same level the S&P is all tied up on right now. So we got to think this is that 918 level is not, again, it's not some small level here overhead. It's a big psychological level here for the buyers and the sellers. So if we do pop up right now, just watch for those buyers coming in once, twice. All their stops now will be sitting below that low. And it's exactly where those 2 try failures into those hidden channel. First test is the best test. It's exactly where we look for those types of reversals, right? At a major area of resistance above in this case, 2 trading ranges. Again, big magnets down there below. So keep your eyes on that for the 1, 2 try failure and that run back down into that trading range. Grab that short off the high of that channel. Is that making sense, right? If you're enjoying the video so far, let me know in the comment section. I'd love to know what your favorite part of this video is or what you use the most each day. All right, give me a shout out here in the comment section. I'd love to know what you see as the most valuable part of these lessons every evening. All right, how about some breakouts? There's a bunch of options here for a breakout. 12,000 is a big round number. 12,056 is definitely where this market wants to go here for tomorrow. First things first, this could easily be a 1, 2, 3 breakout. I would want to see a very convincing and very strong pop through that 1119. As I mentioned before, if we have enough momentum on our side, it's oftentimes enough to go out find that channel and grab, at the very least, a retest of that high. Then we can start to think about, okay, do buyers struggle with 2 tries, and we can dump it back down from there. That is very much something we're going to keep an eye on here in the overnight, into the early parts of tomorrow. Keep in mind that 1, 2, 3 as we go. Find those traps. Mark off that high, mark off that low. Look for those prior swings, because usually that's where the best entries are going to be as we go higher. Okay, again, we know where the market wants to go there from here. Trap, failure, pullbacks. Another breakout, and keep in mind, all of these will apply to the S&P as well. Another breakout, which I think is very, very likely here for tomorrow, if we can get enough momentum through this major area of resistance, is a pop and grind. A pop and grind is very common whenever we have one side of the market that might be getting out of their positions here and letting this market go higher. Imagine now we pop up and we start to kind of flutter. We grind and grind and grind. These are some of my favorite ways to find a trade, because that grind pretty much tells you the other side of the market, all the bears who sold this thing down last night, they're getting out of the way. And at that point now we can mark up that high. I can mark up that what we call a hidden channel. Right? See how I do that? I draw that trend line off those highs, and then again, go out and look at those prior swings. Try to get underneath a prior swing. That's usually where the best entries are. If you can't find a prior swing, get underneath the moving average. Look for the bears to come in and sell that pullback. Remember, it's a very strong move at that point. Anytime we see a real strong move in one direction, it's almost a guarantee we retest that high again. And so at this point now, let those bears come in, try to get short off the moving average. You know exactly where their stops are. This is exactly how I'd like to trade that pop and grind, that pop and grind channel, that pop and grind breakout. It pops up, it grinds higher, draw that trend line nice and tight off the highs, bring it down to one of these major lows, and wait for that pullback under the moving average, right? That's the key. You get under the EMA, it'll trap in those bears and give you that edge as you run those stops going higher here. Now, one more on this, one more breakout pattern is a 2-try breakout. This is another one that, again, can easily apply to the S&P. The S&P, of course, has to get through that top we've talked about here already. 2-try breakout. These are really, really powerful setups. Strong move, right? Really strong move. Shallow pullback. Lower low in price. Higher high, sorry, excuse me. Strong move up. Shallow pullback. Higher high in price. I get ahead of myself on that one. What do we always say? Traps, baby. One of my favorite setups. Right? Again, strong move, shallow pullback, higher high in price, and those traps. The strong move is what gets that momentum going, right? The shallow pullback drives everybody crazy because they can't get in on it. And the higher high basically confirms it's not just a double, it's not just a V-top, right? And going to roll back over again, because those do happen. We do see V-tops that kind of roll back over again, right? So strong move up, shallow pullback, barely touches the moving average. Oftentimes it doesn't touch the moving average. That higher high in price confirms it. And then everybody wants that trap here. Now, added bonus points on this. Find a channel off that high, off that low. If you can combine it like that, that is a fantastic setup. That is a money-making trade there as we go. So now we got a couple different breakouts as we go here. Remember too, we mentioned the range on the S&P, right? If we do pop up into a trading range, we know the game plan now for that trading range as well. All right, guys, we've covered the high side, right, as we go higher. We've covered the downside. We know that ranges are possible. We covered that on the S&P. Let's keep going. How about some oil here? Oil is definitely the ugly duckling of the group here tonight. You can definitely tell that oil is waiting on something right now as they continue to range out here on a day-to-day basis. The most important thing right now on the oil is we've got 2 ranges. We had a breakdown earlier, early in the session that popped up, and then that pretty much kind of ended with a range there as well. There are 2 trading ranges on this chart. Now, with that said, it does look like the most recent range is being taken a little more seriously. And I say that because the amount we go above that trading range, right, this range right here, is pretty much exactly on the amount we go below the range. You know, pendulum swings are really, really valuable tools. And so really in a nutshell right now, for the most part, it's a bullish market, right? And again, I know it's tough to say bullish because it's not that bullish, but it is slightly more bullish than bearish. Bullish into that trading range. We pop up, we roll lower, we hold the pendulum swing now, and now you got to think those buyers are trying for what? They're trying to go back and take out that high. And possibly here, slingshot through that high. There is quite a bit of overhead resistance here. This area up here is definitely no small level of resistance. So buyers would love to kind of slingshot this up into those highs. From there, can we sell it back down again? Definitely keep an eye for that. Or do we slingshot through those highs and the next big level overhead is 113.83. Okay, that's the next big objective. So right now, buyers would love to go back and retest that high, take out that high, and potentially run all the way that 1383 here. We'll see though if they can do it. What do the bears want right now? Yeah, the bears they get some waiting to do, right? They get some waiting to do. The bears would love to sell off that top, absolutely, because you got ranges galore everywhere here right now. Ranges act like magnets. Bears would also like to sell a breakdown, but a lot like the S&P and the Nasdaq, they have to be careful down here because, again, there's no shortage of areas of support. We talked about this last night on the video. This is basically a big spike in channel. You know, spike up into a channel. Spiking channels are very, very straightforward. They pretty much tell you that base of that channel, that's usually a very good place to be a buyer. So you got to be careful with as a bear right now. Again, there's definitely potential for some shorts off the high, but as we go lower, unless we see a substantial move lower, a real strong pop lower, again, momentum is going to be the key here as we go. The most important thing that you want to kind of think about when it comes to trading this stuff tomorrow is this is basically one big wide range. And so whenever we have a big wide range, momentum plays a big factor. The reason why this is important for you is because as we go higher, if I want to sell this, that's a lot of bullish momentum. This is exactly where those 1-2 failures come in handy, right? We go lower, back down to those lows, 1-2 failure. So if I had to guess tomorrow, I would guess buying low around these edges, selling high around those edges, using those 2-try failures into those new channel pullbacks. You know, for example, as we go higher here, we take out that high, buyers come in, they try to buy it. They try to buy it once, they try to buy it twice. All those stops get hit. As we go lower, we find that new channel and we sell back down into that trading range. 2-try failure. Why 2 tries? Because again, it's a little bit more bullish and that momentum will be pretty legit. It will be legit as it goes higher here. Again, this sequence, this 2-try failure can easily be applied up here too. Okay, so think about this setup right here, that 2-try failure into that first test pullback. That definitely works up around these highs as well. Okay, I'd be a little more careful way up here. We'll talk about that in a second. Right? That's a little more aggressive if we break out there. But I would say here, right? As we go up, 1, 2, back down, find that new channel, and you're good to go. Or if we end up rolling lower, you know, we roll lower, we take out these lows, moving average comes down, bears, again, this is now very bearish at this point. If I want to be a buyer at this point now, I've really got to stay patient. Let those bears try a couple times here. Let them dig their own grave. Let them commit on the short side. Once they're in, now we know where their stops are. Now we know where the bears have forced to buy their way out of their positions. And this is exactly where we can look for that 2-try failure. And then again, hurry up, grab that new channel, and grab that first test off the low of that channel. 2-try failure. Again, one big range here. Market will want to rotate back and forth, back and forth. As it goes all the way down, momentum builds. And as the momentum builds, we try to trap in those bears, use their stops as fuel, if you will, buying the stops, the two-try failure, and then again, whichever entry setup we get, that trap, that failure, right, that pullback combo off of that low here. Be aware this middle is probably where the losses will come tomorrow. So stay out of the middle here on that range. Buy low, sell high, and of course, avoid those middles. Now, how about a breakout? Right? How about a breakout? It seems like it could easily happen. Again, they have to kind of really push through this area here. You know, there's more likely right now we go up and then 1, 2 back down again. That seems a lot more likely right now, but definitely not the only option here. If they can crack above that area, that 113.83 is definitely on our radar, and I think it's perfectly reasonable to get a pop up, take out that high, have those buyers hold that pullback and jump, you know, or it pops up a little bit, holds the pullback there, and really jumps to that high. You know, again, remember, if we have enough momentum jumping off that moving average, then we're going to be able to find that new channel, and we can definitely buy that first pullback. Okay, and again, I say buy that first pullback. It's not usually a pullback setup. It's usually a trap setup or a failure setup. You'll see a lot of examples of those in that free class. I would also look for that pop and grind. The pop and grind is always on my radar, right? Pop and it starts to grind. If that's the case, that usually means something's up, right? Something's up. Something hit the news wire. Something has changed. There's something bigger going on usually when there's a pop and grind like that. Find that channel nice and tight. Do not go out and find bigger channels. It's very tempting with those pop and grinds because they don't look right. You know, they kind of feel kind of wonky and they feel kind of weird. So the key is you want to really draw that channel nice and tight off the high, anchor it off that low, find those prior swings, get under prior swings ideally. If you can't get a prior swing, wait to get underneath the moving average, trap in those bears, and you got them right where you want them there for that failure, that pullback. And again, the objective is to retest that high. At that point, who knows, right? Who knows? The buyers may come in, they might get their profit, they may struggle, 1 try, 2 try, and dump it back down into that range again. Okay? This is the dance we play. When we get those strong breakouts, we dig in, we find those pullbacks to retest the high. The runner, obviously, the runner up here is that 113.83. Okay, that's where the big objective is here for those bears, or for the bulls, excuse me. And again, for those bears right now, be very careful as we go lower. We really have to get that punch, and it really has to push, right? Just as the S&P and the Nasdaq, as I mentioned earlier. All right, guys, really good game plan for tomorrow. So buy low, sell high, focus on those 2 try failures, okay? Because, of course, there are 2 ranges, and that momentum will build back and forth. Be ready for that bull breakout. Be open-minded to the bear breakout, but be aware of the challenge of the bear breakout right now because of the support areas down here. So really make sure you've got a lot of momentum. Very, very excited for tomorrow. Again, next couple of days here, there'll be a lot of scarcity, a lot of pressure in these markets because, of course, Friday's a half day, Monday's a holiday. The next couple of days, we really want to make all those trades count. Now, tomorrow morning, 8 o'clock Eastern time. We've planned our trades tonight. We're going to trade our plan tomorrow. If you're looking for a place to come out and learn and trade along, you'll love our trade room. I have all the worksheets for you, all the flashcards, so it's easy to step in and learn and trade along with me. I'll put all of the membership links you guys need, all the free class links you guys need. I'll put all that stuff right in the description of the YouTube video. So get registered, either take the free class or pull the trigger, take the dive, jump in as an advanced member, and I'll see you tomorrow morning, 8 o'clock Eastern time in our trade room. If you have any questions, don't be afraid to call the office. I know I do speak quickly on these videos, so they're not forever long, but we'll slow this way down. So call the office. We'll make sure you have all your computer, your broker, your charts, everything set to go, so you're ready for trading with us tomorrow morning in the trade room. So don't be a stranger. Don't be afraid to call the office. I'll be here standing by to help you out as well. All right, guys. In the meantime, don't forget, have a great holiday weekend coming up here. Again, I hate to leave you guys hanging the rest of the week here, but It is the time of the month again, right? Holiday time here coming in tomorrow. Last newsletter this week. I will, of course, see you guys tomorrow in the trade room at the opening bell. So members, I will see you guys tomorrow. If not, get registered. And if not, we'll come back and join you guys next week after the holiday. Have a very, very happy holiday. If I don't see you guys tomorrow morning. In the meantime, be well. Be nice to each other. Enjoy the holiday. And you better be here next time. Adios, amigos. Bye-bye for now.